Coming to you from the Tar Heel State, this is the Carolina Commercial Real Estate Connection, bringing you industry insights and hot takes from Carolina real estate experts, helping you begin, grow, and scale your commercial real estate portfolio. And now your hosts, Tony Johnson and Cameron Pearson.
Carolina Commercial Real Estate Connection. Today we have Eric Nelson with us. Eric is the founding principal of Wild Oak Capital out of Colorado. He comes from the civil engineering background, and he also hosts the Real Estate Mindset podcast, which we were lucky enough to be a guest on not too long ago. And Eric, thank you for joining us. Welcome.
Yeah, my pleasure. Thanks for having me. I'm excited to be here today.
Yes, sir. So could you tell us a little bit more about your background?
Yeah, I'd love to. It's funny. I grew up in Southwest Colorado. My parents were awesome. Kind of like, I would say middle class, kind of standard American upbringing, so to speak. Was super into sports, that kind of stuff. But when I say standard American upbringing, what I mean by that is, it seems like a lot of that society, especially in that time, was really like, you're going to college, you're going to get a degree, you're going to get a career. And I think that's still prevalent today. I think maybe it's shifting a little, but so that's pretty much the path I was on from as long as I could remember. It's kind of like college is what you do after high school. And I still fully believe in that. So don't misunderstand me, but it will kind of come into my story later. Essentially what happened was I became good at math, right? Like I was just excelled at math in high school. And so my parents were kind of like, well, you should do engineering or something like that, even though I've never really had a passion for it. That's kind of the path I just went down because that was a talent. And so after college, I graduated and kind of the same thing. I mean, it's funny. I graduated in 2009, which is not a great time in the economy. I was able to get a job, and it was honestly fairly miserable. I mean, I think the people were great, but the job was just insanely boring. So I moved on to another job, and then I finally was like, okay, let's start our own thing. So I had a really good boss who taught me a lot of stuff. And so my wife and I traveled for a year. That's a whole different story. We drove our car from here to the bottom of South America before we had kids. So that was a cool journey. And when I came home, there really wasn't a job for me. So I was like, all right, let's kind of try it out. So I just started an engineering company and kind of never looked back. We had good success, but all the while I knew in the back of my mind it wasn't really ever my passion. I just kind of did it. I was never really into it. Along the way, I kind of found real estate. I mean, it's like everybody. It's like there's hints of it here and there. Eventually, I found bigger pockets. Kind of started to learn about the business, that kind of thing, and that really got me excited. And so, I started that transition of really investing single families, then small multis. And I met a mentor who was doing syndication. And to me, that was like, I was like, I have no interest. I have no interest in investor money, no interest in partners. And so I was pretty resistant to it, honestly. And then eventually enough kind of pushing and enough kind of questioning, I was like, okay, I don't know why I'm resisting this so much, because a lot of my like natural talents are kind of suited for it. I actually love to partner. I love to talk to investors. That's like the thing I love more than anything now. I don't know why I was so resistant, but all that said, so we started buying apartment buildings, and I was in a unique situation where, I could kind of phase in and out. Like I could spend 30 hours a week on multifamily and 10 on engineering, and eventually just kind of phased out and closed the company and sort of moved on. But essentially part of my story that I like to tell is it's okay to start over at any age. So I'm 38, gonna be 39 here shortly. And I basically just gave up engineering. And it's not really the right way to say it, but I'll tell you, I'm much, much happier and have much more passion for what I do every day. So that's what I like to kind of encourage people too, is like, that's totally doable and totally okay and totally possible for that matter. So that's kind of the whole long spiel about me.
Wow, that's a ton of stuff that
Yeah,
we
I
could
kind of laid a lot
spend
on you.
quite a
Sorry.
while chatting about. It's amazing. And to be quite honest, the thing that is probably not on greatest bit of topic, but I'm the most interested to find out about was you guys traveling to all the way through to this. You said you traveled from Colorado basically to the southern point of South America.
Yeah,
How long
we
was
bought,
this
it's funny.
journey?
So we knew we wanted to do kind of some like epic trip. It was just kind of our, I don't know, it was just like in us, I suppose. And so we started saving money and I started reading books and blogs and stuff. And this was um, before kind of the van life thing was cool. And there weren't that many podcasts really yet. So this is 2015. So it was not that long ago, but long enough ago that, you know, there wasn't that many like van life people out there. Now it's more prevalent, but anyway, that said, so we're like, okay, what kind of car can we afford? Where do you want to go? And so I read this book where this couple did that. They drove from the United States to the bottom of South America. And so I started reading this book and I was like, this is perfect because I speak a little bit of Spanish. My wife speaks a little Spanish. That's kind of one nice thing, you know, language barrier is a little bit less. We can drive the whole thing with the exception of one stop. You have to ship your car. And we want to see all those countries. So it kind of like ticked all the boxes, so to speak. So we bought a Volkswagen van and eventually like within a week, we're like, this is not the one. So we ended up selling it quickly. We found this 1982 Toyota truck that had like a camper thing all attached and it's perfect. It was called a Chinook, tiny little truck, 2-wheel drive. And we're like, let's do it. So we put some money into it. I spent a lot of time kind of fixing up how we wanted it. I read all electrical and plumbing and all that stuff. And then, yeah, we hit the road and spent a year driving from here to the bottom and lots of stories along the way, of course. But it was a year of adventure and super exciting. And of course, I mean, there's places, it's funny, like when you look back, it's like, we wish you would have done things differently, but it was still a truly amazing time.
So I would want to know, I guess, a couple things on that. So one, what would be your favorite stop that you made that was the most memorable place that you were able to visit and why?
Well, I think a couple. One, we stayed with we have some friends that are missionaries and at the time they were living in Mazatlan and they had this house that was like right on the beach pretty much. And long story, but their friend had basically given them the house to live in while they were doing their missions. And it was just one of those kind of like amazing things that happened to them. So anyway, when we visited them, it was just really nice to spend time with them with nothing necessarily on the agenda. So it was like, it kind of started the trip because it was only like a week into our trip, really, like south of the border. So that was kind of the kickoff. And he's a really good cook and they're both just really amazing people. So to start with them was really, really powerful and be like, okay, cool. Like sort of set our mind for like, how do you spend your days? You know, what are you after? What is the point of this trip? That kind of stuff, you know, and so that was huge. And then, you know, kind of the flip flop of that is we really, really love South America. I mean, we love the mountains. We live in Colorado. So we had a lot of beach time, as you can imagine, along the way down. And by the time you get to Patagonia, we have these really amazing hikes that we're backpacking through some insane terrain, really high elevation stuff. And so those two things kind of stick out as pretty powerful and amazing stops.
That is amazing. You know, I wish I would have done that. If you look back in time, I was too busy. I had bars and I was too busy drinking and partying to think things through at that young age that I would have been able to do something like that. But it's amazing, you know, for you to be able to have that. That's going to be lifelong memories for you on it. Now, when you were on that, this is prior to you opening your civil engineering firm, right? Did that idea generate on this trip? So kind of when you got back, that was, here's the plan?
Yeah. So before that trip, I was working for a boss who's a really cool guy. I mean, one of those bosses that's just like, he was super open, super fun, but also very smart. I mean, I learned pretty much everything I know from him. So I worked for him for, I think, 3 years or so. And I was very transparent with him. I was like, hey, I'm leaving for a year, starting in January 2015. He's like, awesome, man. How can we help you plan it? Like he was just really a cool guy, but he was also very honest. He's like, I can't promise a job when you return. The things just, you never know. So I kind of had in the back of my mind is like, I may not be coming home to a job, but on the trip, to answer your question, I had a few friends call and they'd say, hey, can you design my septic system? Or, hey, can you design my foundation? And I was like, sure, like extra money on the road. Sweet. So it kind of did. It kind of like, I mean, I remember opening a bank account. We were in Guatemala and I called my mom. I was like, can you go to the bank and sign for me to open a bank account? And she's like, sure. Like I was opening a bank account, like starting, like made a logo. My wife like made a website for me on the road just because we wanted to like be able to accept money and claim it properly and stuff. So it kind of was born on the road. And I didn't make a lot of money that year. Of course, I did 5 or 6 sort of side jobs, but when I got home, everything was in place. Like I didn't have to create anything. All I needed to do was kind of hit the phones and pretty much beg people for work. And that kind of took off. And I was, for better or worse, looking back, I probably would have changed things. But what I did was basically just undercut the market. I was like half price of any other engineer out there. And so people were like, sure. And it was a challenge actually from there, because then people expected that, I had to slowly raise my prices back up to market as we got busier. But that's a lesson learned, but it was a way for me to kind of get some work early on. So long answer to your question, but yes, it was born on the trip.
Well, that's an awesome story. So yeah, I think, just same thing with me with as a contractor. When you start out, you have that price so low, and you have to, through time, if you can make it, right, as any new business, if you can make it, you eventually have to start considering, okay, I have to make more money if this is going to remain feasible, right? So it can't all be for learning and for lesson and for building up, stuff. You've got to actually, make some money. So you have to make that determination that you are worth more money, which is a big mental struggle and mental hurdle, that you can then charge for what you're actually providing, right? And so, some of those clients that had been paying nothing want to continue paying nothing, but then you find new clients that will pay you for your services, right? As long as you do a good job.
And I think that's true for like multifamily too. Like I wouldn't call it a mistake, but early on, we were giving up so much of the GP for mentors to come help us. We were like crazy splits. Acquisition fees were essentially nothing to get started. And I think, I think that's sort of what you have to do. But now we're kind of in this phase where it's like, okay, we're nearing 1,000 units. We've have some success in this. We're delivering returns. It's time for us to underwrite in such a way that still delivers returns. But now we're seeing the deals first, and it gives us the ability to have a decent acquisition fee, maybe a slightly larger split, so long as the returns are there for investors. So we're kind of seeing that transition again now of, okay, we're worth more than we were when we were brand new. And the cool thing is, like, I'm so grateful for those investors who took a chance on us early on, because when you're very new, I've always been very, very honest with investors. I've never like done I have tons of experience thing. Like yes, I had done some small multifamily, but once you do a syndication, you just have to say, no, this is my first one. You're going to have to trust that we're going to do everything we can to do it. And so I'm super grateful for those early investors who kind of took a chance to say, all right, you're new, but I trust you and I think you're going to do what's right. And so now, again, we're kind of in that period where it's like, okay, now let's start to make some money on what we're doing. Let's start transitioning a little bit here to help us with our income as well.
Okay, let's back up a little bit on it. That's perfect. I want to get into some of when you've transitioned into, so you got out of the civil engineering, closed your shop, transitioned into the syndication and multifamily. You were investing, am I right or wrong? You were investing in properties, residential, and then eventually multifamily while you had your civil engineering firm, right?
I was, yeah. And so I had a little bit of flexibility just because I was co-owner in that thing, and I was really clear with my partner about what was happening. And so, yeah, like a lot of people, we bought a first single family as our first kind of rental project. And it was a learning experience. I mean, honestly, I wouldn't buy that house again, but I think that's what I tell a lot of people. I host a meetup, and everyone is welcome. We talk a lot about single family stuff just because I want to help people get into the business. But the very first one, a lot of times you don't make a ton of money. It's almost like just crossing that threshold of fear. Like, you know what? You can buy a second home. You can, whatever project you're wanting to do, it's definitely possible. You have to take that leap. So luckily we did that. And my in-laws partnered with us on that deal, because at the time, we were just post-trip and we didn't have any money. And so to have a partner who again came in and was like, yeah, we'll supply the money, you do all the work. That was kind of our partnership. We all made a little money, not a lot, but we learned a ton. And then after that, we're like, okay, now I know a little bit more what to look for. So we ended up buying another one. And then I kind of stumbled into a sixplex. And that's actually a really cool story that I'm happy to share if we have time. But really neat kind of way to find that. And then that's really what kicked us off. I mean, we had a kind of a cash flowing asset, and we eventually sold that. And that's really the seed money that kind of started Wild Oak. It was kind of like a flip, so to speak.
Well, let's go through that. I want to understand first, to go back to something that you mentioned much earlier, whereas you had someone, so before this sixplex, or was it after this sixplex, you said that you had a partner that was kind of pursuing you to do these things and raise money. So the sixplex at that point, was that around the time frame where this connection happened?
Yeah, so I'll just kind of run through the whole timeline. So basically for us, we bought our house, I want to say 2012, 2013, like something like that. So we bought in the market around that time period. And like always, it was really stretching our budget. I remember my parents like, oh my gosh, you're going to buy that house. And I'm glad we did, because now the market's basically tripled in value. But so we bought our house. Then what we did was we left for a year. We rented that house while we were gone. So that was kind of our first foray into being landlords. And what's funny is we were out of the country. So I had to rely on friends or family or handyman or something if something came up. But I was kind of like, oh, okay, like being a landlord is annoying, but totally doable. So when we got back, I was like, you know what, let's buy another house and see what this looks like. And so I started kind of looking into houses in our market, and I found this kind of off market, pretty tiny little, probably the roughest house in town. and I approached my in-laws, my wife's parents, and I said, hey, I want to do this real estate thing. Would you be interested to invest with us? And I'll do everything. And they're amazing people, but they really would have said no had they not trusted me. So they were just like, sure, like, we know that you'll do your best, and we know you, and let's do it. So they put up the down payment plus a little bit for rehab, and I did everything. I mean, I was the plumber, the electrician, the drywaller, I mean, the whole thing, which was great, because even though I had those skills just from previous kind of house fix-up stuff, this is different, right? It's an investment. So it's kind of like keeping every penny in mind and all that stuff. So then eventually maybe 1 year later, we found a triplex that was an owner finance deal. And that was my first basically mind shift of like, oh, you can find owners out there who can finance this, because on paper, we still weren't making that much money, as the owner of a new business. So we ended up moving into that triplex. So immediately what happened was we kept our original house, moved in the new triplex, and we had a rental. So all of a sudden we had 4 rentals, the 2 that are behind our house, which we still live in, and those 2 other single families. And so I'm kind of like, okay, like I'm spending more of my time as a landlord, but I'm kind of enjoying it. And then I'll tell this story about the sixplex if you're okay with me taking a little time.
Please.
Basically what I was doing was, once I realized owner financing was a possibility, I had a baby son at the time. This is my son who's 6 now. I would push him around the neighborhood, in his stroller, and just kind of spend time with him. But I would also call on every for rent sign and every for sale sign I saw. And the for rent one was the best because I would just call and say, hey, what are you asking for rent? Looks like, just pretend like to be a renter. And then I'd always ask the question, would you be interested to sell the property? And of course, I got hundreds of no's. Before I was walking, I saw this gentleman who's actually putting the first for rent sign out in the yard. So he was standing there and I was like, hey, it's beautiful property. And what was interesting was the for rent sign was like 15 years old. I mean, it was totally faded, had never changed. He was just like, that's how he's always done it. That's the price it's always been, that kind of thing.
Right.
And so I was like, well, it's really neat property. Would you consider selling it? He's like, yeah, I really would. I'm pretty tired of it. And I was like, well, if you considered owner financing, and he's like, well, what's that? So we started this conversation and I gave him a little something to chew on. And what's interesting is he was like, well, yeah, but I would need a lot of money for it. And I was like, okay, well, throw out a number. Like, what do you need for it? He goes, I'd need like $1 million. And a sixplex in our market, that's a pretty good price. So I knew immediately that's fair. You didn't even have to see the units yet. So I was like, okay, let's, talk to your attorney, talk to your wife. Let's get back together. So I called him in a few days. He's like, yeah, I think we would like to sell it. And I said, all right, well, here's the thing. I won't negotiate on price. I'll pay $1 million for it, but I would need an owner finance. He's like, yeah, we can do that. It sounds great to have monthly income. I was like, but here's the catch is we don't have very much money. So I need a really low down payment. So I offered $30,000 down on $1 million purchase, which is 3% down.
Right.
If you're doing the math. And he was like, okay, like didn't think twice about it. And I was like, oh my gosh. And this purchase was on our own. We had no partners, pretty much all of our money. And I remember like, I called everyone I knew who I thought was smarter than me, which is a lot of people. And I was like, am I crazy? And all these people that I knew who I trusted were like, no, that sounds like a deal. And sounds like you found a winner, like go for it kind of. But I remember losing a lot of sleep, like how could I possibly borrow $1 million? Anyway, so that kind of got me into this understanding of, leverage is really powerful. That's a pretty risky move. So if you're out there listening, 3% downs are super risky. The reason I was comfortable with it is because I think at the time of purchase, it was probably worth 1.1, maybe a little more, something like that. And so I'll finish out the story. Actually, I run this meetup, and that's kind of when it started. And I met this gentleman there, and he goes, I'm looking for something in town, like a multiplex. And this is about a year after we bought it. So we had it pretty well fixed up, totally stabilized, rents were up. And I said, you know what? I'd actually sell a sixplex. And he was like, oh, that's perfect. I said, but you know what? I need to call the person who sold it to me because they're financing it, and I don't want to put them in a bad spot. So I called him, and he goes, you know what? Why don't you I'll just continue the note for the new buyer. And I was like, oh, that would be really cool. So I called the new buyer and I said, hey, you can continue this owner finance note. It's really good terms and all this stuff. And he's like, oh, it's great. I have to like go out to the bank and blah, blah, blah. So it kind of worked out where the seller who sold it to me can, and still has the note to this day. And the new buyer came in and kind of took that over. And it gave us about a year, probably a little over a year. We made $150,000, something like that, which is a huge number to us at the time. And again, that was kind of the seed money to start Wild Oak Capital, because then we could have money for, attorneys cost money and earnest money's out there and that kind of stuff. It just costs money to kind of get going. Plus, we wanted to invest in our own deals. So that was kind of like the aha, plus a little luck, plus a lot of just asking, and so that was kind of the story behind that. And then right around that time, that's when I sort of wanted to dive into syndication. So all those pieces kind of came together, purposefully. And
so the guy that took over, and so you basically got an arbitrage. So you sold it to him, let's say at 1.15.
That's exactly what I sold to him. Yeah.
Right. So you sold it at 1.15 and basically asked for 150,000 down.
Yeah. So he put 150 plus down because it was like probably 185 down because I'd paid that note down a little bit. Plus I had put 30 down. So he put that difference down. And Yeah. So
and then
after all
just
of our
took over.
costs and stuff, we probably truly profited maybe 130, something like that.
Mhm.
Plus, of course, we had to pay long-term capital gains, but not to get into taxes. But the point is, we probably truly walked away with $110,000 in true profit over about a year time. And yeah, like you were about to say is, so if he was buying at 1.15, I think his down was around 185. That's still a really, really good deal
Low
for
down
him.
payment. So
Yep.
this is a great deal for him. And he's the guy's owner financing. So obviously the numbers were already working and you're just continuing that. So for him, it's just a matter of, a down payment, right? So it's just the
Well,
down
yeah.
payment, and the
And the
down
thing is, for
payment
he was
becomes your
like,
profit, and
yep.
being able to coordinate through all that. I mean, that's pretty amazing that you did that. I see that now. This person, is that person a person that you ended up partnering with in the future, or did you build a partnership with somebody else beyond that?
Yeah, someone beyond that. So it's a small town, so I still bump into those guys sometimes. So I know he still owns it.
Mm-hmm.
I know that situation's still going, but it has nothing to do with what we're doing now. It was just happenstance,
So
really.
tell me about your partner. So you obviously built up a lot of confidence through that transaction and what you've done. It's hard for people to get over that mental hurdle, which is what you said there in the beginning. So once you kind of do that mind shift, and I think you said that's what shifted your mind. If we go back a little bit, right? You're like, this was my mind shift. Like I'm doing really good at this. I'm obviously I've got a knack for this. I made a good deal happen here in 1 year from one transaction. What if I do 5 like this in a year? Then all of a sudden, something big is happening in my life, right? So tell me a bit about where you came across your partner, how that relationship, sprouted, and kind of how that all has gone and created into you Wild Oak Capital.
Yeah, I love to. And I appreciate the kind words. I mean, I will say, like, especially in our market, again, it's not a huge town. So that type of deal is kind of a white whale. I mean, again, I probably heard 200 no's before I heard a yes, So I think that's another lesson here.
I guess I'm simplifying it a bit. I mean, it's always out there, but it takes a long time to find. I mean, a long time, a lot of networking, a lot of boots on the ground work. I mean, it's going to take a lot of effort, and you cannot give up. The people that actually make it in this business are just the ones that are persistent for a long period of time and wait, and are patient. Don't jump in and you find a deal and go. So you can do a small deal like you did with your residential and start out with that, or you can just hold and network, and you're going to eventually find something that pencils. You will find some deal as long as you continually network around, continually put out there what you're looking for to the world, and eventually the world's going to provide you an opportunity. As long as you stick
Everything
with
you
it.
said is so true. I mean, a question I ask on my podcast is, like, what do you think has provided your success? And that's a question I ask because everyone has a different definition of success, which is another question I ask. But essentially what I'm asking is, what's the value of thing? What's the thing that kind of like you could pinpoint and say, what had provided your success? And it's shocking how many people answer consistency, persistence, those things that you were describing. You nailed it on the head. Real estate is kind of this like slow grind. I always say it's a get rich slow game. I mean, it is not a get rich quick game. That's a good way to lose a lot, is to try and be impatient and force it. You nailed it. It's super, super patience. To answer your question about my partner, I'll kind of dive into that. And I do want to come back to this because I think it's super, super important. But I joined a mastermind. So this is what you're saying is like networking is so key. It's go to meetups in your area, join masterminds, or join some sort of group. Like I'm in a men's group that's super powerful for me because we can be really transparent and honest. Those type of things, it's amazing what surrounding yourself with people who are doing what you want to do, kind of explodes your future. And so I love what you said there. So in this mastermind, the person who runs it, he reached out to me. He said, hey, this guy I know is looking for partners. He's looking to invest in Oklahoma, and I was interested in Oklahoma too. So I just shot him a message out of the blue, and I was like, hey, I heard you're looking for someone to help underwrite and look at deals and stuff. And so we kind of clicked right away. We ended up flying to Tulsa together, spent a weekend together. We're like, okay, this is awesome. Let's hit the ground. So his name is John. So the two of us were kind of looking all over Tulsa. And then really honestly, shortly after that, quite lucky, we found a deal. And so we were ready to kind of, we was under contract. We were kind of going through DD, and I was realizing, man, this is a ton of work for two people. We really need some help. And there was a guy who was coming to my meetup, kind of oddly. He lives in Houston, but he's from this area. His name's Shane. And he was just happened to be back home, like visiting his parents several months in a row. And so he'd come to the meetup quite a few times. He and I started talking, and, I could tell he's super, super sharp. And so I asked him if he would consider underwriting for us, if we could just pay him like hourly. And he's like, sure. And so I started sending some deals. And then I realized, man, this guy, he and I aligned so well that we should just bring him in on this deal we have in our contract. And so he really kind of jumped in and joined us pretty much immediately. And we ended up closing that deal a couple months later. And so the three of us are just kind of running. We ended up finding another deal. And then I realized, oh my gosh, now the new pinch point is asset management. That takes a lot of time and effort, which doesn't get talked about a lot. And so my brother, who's kind of a project manager, I thought he'd be a good asset manager. So I asked him to join us. I said, hey, can you kind of run these projects more or less on the side? We'll be out in front if you can kind of take care of the day-to-day stuff. And he's like, sure. So that's our fourth partner. And so that's kind of the group of us, is those four people. And it's worked out really well so far.
I love that. And you have to, that's amazing that you went out, you contacted this guy, and then you flew out and met him in Tulsa, you connected, and you had that. I mean, I would say I'm always looking for, those people, that person that can just be the game changer for you. This is you. In being a business owner, most anybody that's an entrepreneur that hasn't been in partnerships but has owned a business on their own, it's difficult. And then it's hard to, relinquish power and be able to partner with someone. So to find those connections are difficult. And again, that takes time through networking and going out and kind of putting out there what you're looking for, taking the time. And you're going to connect with somebody. It's hard to go out. This environment that we've been in since 2020 has made it kind of difficult to connect with people. But the power of Zoom, really, you can get to know somebody from all over the country at this point. So it's not so much face-to-face. You can become friends with people just Zoom calling and talking to them all the time. It's just like being in front of them, and you can expand your network quite a bit. So tell me a bit with the four people. I always love this, and I'd love to make sure anybody listening knows when you have four people, it's like the magic number is always 3 or 4 to me, right? So tell me what strengths each one of the partners brings and how that brings a cohesive unit together.
Yeah. It's funny. Like I think, I don't know if you're familiar with Jamie Gruber, but he has a podcast that I've been on, but he has amazing, amazing guests. And I just know him, so I was lucky enough to get on the show. But what he asks, he kind of talks about this a little bit, is what's a magic number for a syndication business? And his opinion is 3. And I kind of think the same. Not to say I would change the partnership now, but I do think that kind of magic trio works. And this is sort of the way that I envision it, is kind of one person who's more or less loves to be outgoing, loves to talk to brokers, loves to talk to investors as well. So that person can kind of be like on podcasts and kind of getting the word out, talking to brokers, mixing up deals, maybe going to markets. That person, that's kind of me. What's interesting about our kind of partnership is John, who's my first partner. He's similar to that too, but he really loves broker relationships. So he really loves talking to brokers. So what's happened is he's kind of been what I'll call like the acquisitions person, where he talks to the brokers. He's really kind of sending all the deals to, now we use a VA to kind of do the initial underwriting. So that's kind of his job, is to talk to brokers and do that. My job is more marketing, the podcast, really kind of investor relations is what I focus on. Because what we want to do is provide a really good experience for investors too. So I think we have really good updates. For example, I like to be in contact, answer emails quickly. like just be available for investors if they have questions. So that's really my job, I want to say, is investor relations and marketing. Shane is really, really good at underwriting. He's kind of a detail person. Also does a lot of the behind the scenes stuff. So he'll track pretty much all of the DD stuff. Really what I'll just say is sort of back of house. And there's a lot of work there. So kudos to Shane, because he just does a lot of work that kind of goes unnoticed, at least like if you don't know the business. And then Ben was kind of our asset manager. And so he kind of like, again, if you don't know asset management, it's a lot of work. Basically, you're sort of managing the manager. You're trying to make sure that the property stays on the business plan. And that's a lot of work too, to kind of manage cash flow and how's NOI versus what we projected, those kind of things. So that's kind of how it works for us. I do think you could probably squeeze me and John together to make that trio work, where it's like the investor person, broker person, then it'd be like the underwriter, kind of back house person. And then the other trio would be like true asset management. That's how I've always envisioned it.
I love it. Yep. I agree 100%. So, yeah, I mean, now, so you guys are typically when you're getting everything that you're getting is existing multifamily and you're doing value add?
Yeah, we do. We're trying to focus kind of more on like a C plus B minus kind of thing. We don't really love the deep value add stuff. I think it's a little risky. And to your point, like, for a while there, especially like 2021, a little bit of 22, cap rates were kind of insane. I mean, people were buying stuff in Texas, so like 3-4% cap rates are just kind of nuts. So it really pinched the like ability to force value, even if it was kind of a lot of work. So we sort of found ourselves in this, let's find a C plus asset, put a little bit of work into it, push it up to maybe a B minus or B. We can get rents up without quite as much effort and risk. That's sort of where we found our niche. So the answer is, yeah, absolutely. We got to find a way to add value, but I would say it's slightly less risky. And what's interesting is like the cap rates are similar on those products. You could buy a C plus property for around the same cap rate as you could buy a C minus property. And so the amount of effort to kind of push it up one notch is significantly less than it is like a D class property. I have no interest. There's people out there making a ton of money doing it, right? But that's just not our model.
Yeah, I think it's also very important to define, clarify, and with anything, to be really successful in whatever endeavor you're in. The most successful people in the world, I should say, niche down, and they know where their strengths are. They know exactly what they're looking for and what's in their box and what's out of their box. And as long as you stay true to your box, that's how you build long-term success, which goes back to our marathon event with real estate. So if you stay consistent and true to that niche and you become the master of that niche, then, hey, that's how you become very, very extremely successful and become in the top 1 to 5%, let's say, of real estate investing long-term, if you stay true and become the master of your niche. So that's awesome. So
yeah, no, I totally agree with what you said too.
Do you wanted to go back and discuss something? And now I've lost it in my notes.
I think it was probably, I mean, it's probably has to do with this as well too. Is basically like sticking to what it is that you're good at. I can't remember what it was that we want to talk about either, but essentially it was like, and I love what you said. The people that I've talked to most who have extreme success in something, meaning like 8-9 figures of wealth, the question that I'll ask is like, what's the one thing? And what I hear over and over, and the language they use in the group I'm in, is an inch wide and a mile deep. It's find your thing and just stick to it and become excellent at that thing. And so I completely agree. I mean, I think there's a lot of research to show that too, is shiny object syndrome. All it does is work backwards for you. If you find someone doing something you want to do that you've never done, and it sounds cool, that's a really good way to get distracted and, kind of lose sight of what it is. This is probably what I wanted to come back to, is the extreme patience it takes. It's like, you really got to spend the time to just wait and wait and wait. Underwrite. There was a time we were underwriting 300 deals for every one we bought. And when I tell people that, they're like, oh my gosh, that's so much. I'm like, well, yeah, that's true. Because we're not going to sacrifice, really. We're not just going to go out and find a deal just to find a deal. So, if you're listening, that's the ratio I hear more often in the industry is 100-1. But even that, it means you got to underwrite 100 deals, and it gets old, but you just have to sort of see the end in mind for a long period of time and stick it out.
And to go to that point, I get a lot just with talking and networking around and building relationships with people. I get a lot of people, they'll send out monthly how many they underwrote and how many offers they made and what they've closed on. And yeah, that's one of the biggest indicators for me to someone. I want to see if I was going to invest in someone's deal, I want to see somebody underwriting, 2, 3, 4, 500 for all I care before you get a deal, because I know then that they are extremely, extremely dedicated to their underwriting procedure, and they're not buying something that doesn't meet. They're not altering their buy box to say, oh, we can probably make this work. We're going to squeeze it this way and make it work. That just means you're altering your pro forma. We all, especially in this environment, there are very few and far between deals are going to work. And the majority of them that even start to work are going to be some type of creative method to make the deal work, going back to your original deals. And so if you can understand getting creative deals across, the finish line, where it might have been looked at by 5 other people, right? But then you have been the one that has found the creative method to make the deal work. So it might have been a great opportunity for those 5 other people, but they weren't able to mentally process the correct method to putting the deal together that is then going to make the deal a workable deal for the transaction to happen. Right.
100%. Yeah. And so I have 2 deals in a contract. I can talk about them because we're not raising for them, but one is we're buying directly from the owner and he's staying on and keeping a bunch of money in. So that's one of the deals we found.
Perfect example.
Super
That's
creative.
awesome.
Yep. The other one is the owner's carrying 90% of the deal. So they've owned it free and clear forever. And we have to put 10% down, and it's a 4% rate. And we had 2 years of interest only. I mean, it's just a really, really creative deal. That's a good example of those things out there right now. It's got to be creative. I do think there's some opportunity coming. I think there's some bridge debt coming due, probably 24, 25. But even still, I mean, people are still going to need what they owe on it, and even in that case, sometimes they don't work. We looked at a deal yesterday. These guys, they bought a deal. I can't remember the exact numbers. Let's say they paid 1.8 for it or something. Mm-hmm. They're asking 1.9. And we underwrote it to like 1.5 or 6 at very best. So I'm like, man, we're gonna pay $200,000 less than they paid 1 year ago. They're never gonna go for it, and that's the kind of environment we're in. It's so hard to find them that you just got to stick to your numbers. I mean, you nailed it on the head.
Yeah, and I love this. So let's walk through. So this deal, I'd love to walk through both of those deals just to kind of understand, or somebody that isn't processing a lot of these creative ways to look at it. So the one you just went through, and the first one I didn't get enough on, but I know you're buying direct from the owner. But on this second one, let's kind of dig in how you came up with this and how the owner was receptive to it. How did you pay over asking? How did you look at it? Can you go through some of that with us?
This one, this is a cool one to talk about because it's so unique. Okay, so here's the story: is a church owned this church, and they also owned this, like, call it a 10-plex, give or take, because it's a pretty weird building. And they're right next to each other on the same lot, but it's a big lot. And they wanted to sell the whole property. And so the original listing was this big church building plus this, let's call it a 10-plex. But they wanted to rent back the church and continue use of it. So we called the broker and we're like, I know land use a little bit. So I thought, what if we subdivide? They keep the church, we buy the property plus the extra land, and then they're kind of what they want. They keep the church building, they get rid of this. It was kind of a nuisance to them, honestly, because originally it was used for the church for like some housing that they had going, but that program had closed down. So it was kind of like this semi unused building. anyway, so we approached them and they were like, yeah, no sweat. In fact, I think the elders of the church or something was an attorney and he was willing to do the subdivision. So we're like, sweet. If you guys subdivide that property, we'll buy that 10-plex thing. And then we said, you know what, here's the thing. To your point, we'll pay more than you're asking if you guys carry 90%. And then I think the terms are 40-year amortization and 2 years of interest only. And the church they have money and they own it free and clear. So they were like, sure, that works great. So that's kind of how that deal kind of came together. And what we'll do is that it's a pretty chopped up building. We think we can get 14 units out of it because some of them are just common area. They have egress, they're just not being used for living. So we'll transform a little bit into like a 14-plex. And then we also have a pretty good chunk of empty land that for the future could either be, again, subdivided again and sold off as a big piece of raw land, or maybe we could build on the future. So that's kind of like I guess a bonus because the numbers work as a 14-plex like we're going to do, but that will just be kind of icing on the cake, so to speak. So a pretty unique way to go about that deal.
That's awesome. Yeah, that is definitely a unique way to go. And you just completely, showed everyone clearly how, when you look at something, what we went back to, if you look at it a little different, it was probably on the market for a long time. Nobody had interest because of all these different hurdles, right? But if you just kind of dig in and, communicate with people, see if you can solve one hurdle at a time, then the next hurdle, then things start to fall into place. And you've got a lot of different exit strategies. You've got a deal where you basically have 2 years to implement a plan that you can, have very low cost to carry for this 2 years while you implement your plan on the interest only. You're only 10% out of pocket. You're on a 4% rate. You've amortized this thing over 40 years. All these different things, perfect. Right. That's how you make deals work. That's how you can go in, underwrite something, have a great game plan, and put it into effect. And you have multiple different strategies you can exit out. You can build on the extra land. You can subdivide and sell off the extra land. So if it's just cash flowing and somebody comes to you, for all you know, and just puts an offer in on the land, they want to develop it, or you guys can develop it. Or partner with somebody else that wants to develop it, and maybe they want to bring the money and you bring the land. So there's so many different things that can then happen once you've stepped in and created this creative environment to put a deal together. And now you've got tons of options. So that's an awesome deal. I appreciate you sharing. Well, absolutely, I don't want to, we've gone for quite a while, so I do want to kind of close it out, but man, it has been amazing, awesome information you've shared, Eric. I think it's beneficial for anybody listening and thinking about getting into it, and, stay persistent and enjoying it. And Eric, if people want to reach out to you to find out more about what you're doing or to connect with you, what's the best way to get in touch?
Yeah, probably my email. It's eric@wildoakcapital.com. Just shoot me an email. I'm super responsive. I really love to talk to people about real estate. I mean, it's kind of a passion of mine. People gave a lot to me, so I love to give back. So yeah, if you have any questions about real estate or owner financing or any of that stuff, happy to chat. Or if you're driving to South America, I can tell you some tricks too. So yeah, reach out anytime.
That's awesome. All right. Again, your podcast is the Real Estate Mindset Podcast. So if you want to just kind of follow Eric, reach out, look at that podcast, and it'll be beneficial to you for sure. Obviously, Eric has a great mindset. So listening to him, you're going to go far. So Eric, thanks again for joining us. I really appreciate it.
Oh, my pleasure. Thanks for having me.